We're heading to week 35. We're also heading into September and we're heading into fall. Sadly, last week's prediction about a red week for Nasdaq became true. Nasdaq down more than 4% for the week. It was a mayhem for some stocks. It was especially Friday that was hard. Nasdaq down almost 4% on Friday alone. But that shouldn't be any surprise to you. Because if you've been listening to this StockInvest.us podcast, I told you exactly about the game of interest rates. I've been telling you about inflation in Ukraine war and the upcoming Taiwan conflict. So there is really no surprises at all. And this is the territory that we try to navigate. This is where we try to make money because even in red markets, there are opportunities. I gave you some trading tips last week. I have to admit one of them was really a bust. Was sold with a 5% stop loss. But Chevron, as expected, had a very good week. Up more than 5%. What about the other trading tips? Well, you will know. You will also know what I think can do good for this week. All you have to do is start listening to the disclaimer. After the disclaimer, I will be back with the market insights. What are the expectations for this week? By the end of the podcast, some 30-40 minutes from now, I will give you the trading tips for the week. And hopefully, during the podcast, you learned a few new things. But first, the disclaimer.
Hello everyone. Welcome to the StockInvest.us weekly stock and crypto podcast. The podcast is hosted by StockInvest.us co-founder and Golden Star Signal inventor, Jim Stromberg, who has been actively trading since 1996. If you are watching us on YouTube, make sure to hit like and notification bell so you will be first to know when we post a new video. This podcast is also available on Spotify, Apple Podcasts, Anchor, and other audio sources. Ensure you listen to the entire podcast so you don't miss out on some key tips needed for this week's strategy.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
For this week's podcast, I'm out traveling. Last week I left for my home country, Norway, and I will stay for a few more days before returning back to Vilnius and the recording studio. That means if you're watching this podcast on YouTube, you will not be able to see my face. But the face doesn't matter. It's what you're saying, it's your content, and it is, of course, how right you are. Because in the end of the game, if you don't manage to have some sort of leverage from this podcast, you should not listen to it at all. You should spend your time otherwise, where you have more outcome. Because it's the same game for stock trading. It's no point of trading stocks if you are losing money. So if this podcast really doesn't help you in the trading, my best advice, just go to a better podcast that will help you reach your goal. Because in the end of the day, that's where we want to be. We want to be better off than when we started. We want to have more green than red in our portfolio. And I know a lot of you have heard me say this a million times before, but I just have to repeat it for the new listeners. My game, our game, and end goal is to try help you with the following. Reduce your losses, increase your gains. It's one of the very best strategies to be successful in the stock market. It sounds very easy, but it's of course much into each of this. How do you reduce your losses? And of course, how do you increase your gains? We can talk for hours and hours, and we have already been talking for years about these subjects. But I try to make it simple. I try to give you some markets analysis, some idea about the week ahead of us. Because here comes the very first lesson. If you think it will be a red week, why would you invest heavily? Why would you go to your broker, either it's eToro or Robinhood or whomever you're using? Find the stock, use leverage, put yourself at risk. Well, I can tell you right now, it's a little bit about human nature. That's how we are. We like to gamble, and for sure, sometimes we do not think things through. There is nothing as easy as lose money when markets is red. It's almost a guarantee. Why would you be better than all the rest? Making money when markets are red. The easiest way to make money is, of course, when markets are green, when everything is going up like it was for years and years, just exploding during the pandemic. Before finally taking a hit, and now we are fighting that dreadful bear market. It's much harder to trade. Personally, this is where I love trading. I told you this a million times before. This is where I usually make the best money. It's simply because I'm very disciplined when trading. So that was the very first lesson, is if you expect a red market this week or even this month or this half year, why would you invest all your money right now? Why don't you just put some aside and wait for that perfect buying opportunity, or for sure a better opportunity? So since that is a very vital question, I usually spend some good amount of time trying to explain what do I think will happen for the week ahead of us. What are the things to look out for? What are the things that can affect the day to day? And then hopefully better help you to time your trade. And as I told you, we had 2 red weeks for Nasdaq. Nasdaq fell 4.43% last week, ending 12,142 points. Even Dow Jones fell hard down 1,424 points, or 4.22%. It's the largest fall for Dow Jones for an extremely long time during a week, ending at 32,283. Before these 2 last red weeks, there was 4 weeks of gain. Everyone thought that things would go straight to heaven, that now we are back on the super track. But as I told you 2 weeks ago, buy signals were getting way too high. We were in the top of the trend, and the reaction down would be total natural. Are we now in the middle of the trend? Can we prepare for an upturn? That's the question I will try to answer. First off, what are the things that really can affect the stock market during this week? What we do know is that trend, usually it's strong. It needs time to change. Very bad Friday usually means that we should struggle with the opening today on Monday, but that it can turn. But for sure, the beginning, you have that sentiment from last day for the beginning of the next trading day. And that's a very, very short trading tips, because it's a very classical pattern. If you have a red day, a very red day, usually that means that people see buying opportunity for day number 2. But the beginning of the day usually starts, the opening starts very scared. Those not able to sell on Friday, they have their orders ready for sell on the Monday. Could be a Tuesday or Wednesday during week. The pattern is usually the same. Very, very scared. They don't want another 4%, so they are already in with their sales order. During the first, can be anything from the first minutes to the first few hours, there is a sell pressure. And many times this used to a good buying opportunity, because then people see that, well, 4% is way too much on a day. There is no reasonable logic behind that huge fall, and you have a gain during the end of the day. So this is like this Monday, with having Nasdaq Dow Jones that much down on Friday. usually in most cases, not all cases, but in most cases, offers a trading opportunity. You get in very early, and I will tell you that in the trading tips because I always do that. I buy shares on the Monday so you can follow them, so you can follow my portfolio, what I do. But today, even better, I think that there is a huge chance that there will be some nice lows, which during even the first 2 hours can be a good gain. So that was tips number 2 in how you can use patterns, typical things. Doesn't mean that tomorrow has to be good, doesn't mean that Wednesday has to be good at all. Because it is just that effect after a very, very huge downturn. Somewhat the same for the upturn, not as strong as for the downturn, but you have that same pattern that you start the following trading day, same like the end of that first, and then it flips. So that's for sure one thing that I might think that we see today. We also might see, because in total Nasdaq now is down just a little above 7% for the last 2 weeks, means that they should technically be getting close to some bottoms for sure for many stocks. So from a trading risk perspective, and this was exactly what I was trying to convey just a few minutes ago, this might be that a better trading opportunity. So where you usually then start to increase your positions a little bit. But can there be other things that can affect the market negatively? So what are the main things? The main thing is, of course, that the Ukraine conflict is always there. Now we're getting used to it. But any day, real bad stuff can happen. And you can have a super negative effect of the stock markets. It's not so likely that Russia just retreat tomorrow and we have the opposite effect. It's more likely that there will be some negatives still. But we are so used to it that it has to be some real heavy news before it affects the markets. So personally, I'm focusing on other things, trying to predict other things that really can hit the market hard. And here, and I will repeat that because you heard that maybe last podcast and many podcasts before. Now there is 2 things that I think are main drivers. First off is the Taiwan conflict. You have to keep that on the radar. We see United States try to provoke Taiwan more and more. Not provoking Taiwan, but provoking China to Taiwan. And this thing can suddenly escalate to something out of control. Because we know China is pushing, China is showing very strong interest in Taiwan after Nancy Pelosi's visits. They had it before and they had never tried to hide that Taiwan in their eyes is there. But now the geopolitics surrounding around Taiwan is much stronger. And there is so much more to Taiwan conflict than the eye sees, not just a military conflict. Taiwan is the biggest chip producer in the world. So if big conflict breaks out, well, maybe you've been there already. Chip shortage for cars, chip shortage for this and that pushes prices to the heaven. And even military industry will suffer if chip production gets under more hardship than it already is. So that Taiwan conflict is much more than just a show of muscles. If real things go down there, I cannot see any possible way that the markets will not take a huge fall. So keep an eye on the Taiwan conflict because it's bruising more and more with the feathers. There is very huge reason to believe that it will go much further than this. Keep it on your radar. The other thing, which I've been warning you about, is energy and energy crisis now. As I told in the introduction, we are heading for September. By the end of the week, we are already in September. The fall is getting here much closer and energy prices is already struggling. What about when it starts to get cold? How will these things end? Yes, Germany fires up another coal plant and others do the same thing. But you cannot help with that shortage, that supply shortage. It cannot be helped. You as a trader here is tip number 3, and that's a long-standing tip that I told you many times before. If we expect energy prices to go up, of course you want to be in energy stocks. There is more than oil stocks. There is gas stocks, and you can even trade into electric prices themselves. Option trading, there is plenty of possibilities. Because if anything of what I'm saying true, and we already know, because they're setting electric price records all over Europe as we speak. Every minute now there is a new record. A bad one, not a good one, a bad one. And this will just get worse. There is no reason to believe why it should get better instantly, because the transformation away from Russian dependency will take some time. How much? Half a year yet? I cannot really tell you. All I can tell you that it's not happening overnight, and for sure not as we head into winter. So this transition forcing you away from your car driving, saving electric, you will eventually be forced to reduce your indoor temperature simply because the prices will be too high. All of these things will have an effect, but it will take some time, and during that time period prices will go crazy, even more crazy than they are right now. And I'm not sure where you're sitting, because I have listeners all across the world. Small insights for you, like a country like Norway, which usually is self-dependent on energy. We made some cables over to Europe. Now we are in lack of energy because it goes over to Europe, and prices has 10 doubled in some places in just short term. And even this morning before opening this podcast, I read new records were being set. So even for a country for Norway, it's really hurting. And you can read about electric bills people get in Norway. We are used to having the lights on. We don't shut down the lights like you see in Eastern Europe. They have a tendency to shut down absolutely anything energy related, because that's from their Soviet period time. And as I told you, I live in Vilnius in Litauen, and it's so obvious. They shut down the lights whenever they can. It's more often dark than there is light. But in Norway, we have been used to low electricity prices, so electricity is on. We wash the clothes on daytime, etc. And now, when electricity bills are 10 times higher, you're just being forced to think. But all habits take time to change. So there is huge opportunities in energy. I use them myself, and I think that you should look into it. But as this increases, these energy things will also affect a lot of major geopolitics, because we're heading into election in the United States. There is also things happening across Europe, and we see signs of rebellion several places to these high electricity places. That means political distress, and very, very seldom that's good for the market. So these are things that I for sure would keep an eye on. Taiwan conflict, and all the surroundings around energy prices, because things like this has in history the situations that we see now, inflation, energy prices, all these things have usually led to increased geopolitical, big geopolitical issues, and sadly often more worse. So I would keep an eye on these things. The other things to keep an eye on is, of course, the news coming out for the main market, United States. And this week there will be some quarter results coming out, not so heavy. As I told you last week, we are getting to the end of that season. But still, they matter. It's more the things happening by the end of the week, where the job numbers will come in. You will have the weekly job numbers, and you will also have August numbers. And as I told you, I believe job numbers will start to increase. I cannot see how they will not. But there is a transition to this. We've been into a good summer, and everyone expects job numbers to be very good for August. I thought already by May that we would start to see weakening, but anytime soon we should, and that will neither be good for the stock markets. For the earnings to look out for this week, well, there is a lot of companies, but not many big ones. It's HP on Tuesday. It's also Baidu on Tuesday. Hewlett-Packard, to mention some of these. During the rest of the week, it's many companies, small and big, but nothing really good. The reason why I mention the earnings is because if these are big enough, we know that they can hit the markets. It's like Microsoft, Apple, or any of these miss the earnings, they usually affect the market. The other reason why I mention is because you can do good trading with earnings numbers. You can see which kind of pattern they have. Do they fall before the earnings report? Do they rise after the earnings reports? What are the usual pattern for the stock? You can go to StockInvest.us, type in the ticker, and if we have the data, we will have also something called earnings, where you can see how they usually behave during the earnings day, the days before and the days after, and there might be a trading opportunity. Third thing, if you are sitting in any of these stocks, for instance, on Thursday there will be Broadcom, Campbell, Sienna, Gemseco, Hormel Foods, etc. If you are into any of these stocks, it could even be Toro or Weibo, which also will be on Thursday, and you don't know that it's earning day, you can have a huge surprise. So you should pay some attention to it, especially if you are already in to these stocks. But in my opinion, none of these stocks will have any huge effect on market. It will be individual. Job numbers Thursday, Friday, much more important. That means that the end of the week can be either very good, very bad. I think end of week can be somewhat like last week. So Friday was a shock. I will not be surprised if we have the same thing this week. Can be that it will flip to be a very good week. We will have a look at the chart to try to conclude, will it be a red or green week? I'm just trying to get into you into the thought process about these things. And there is a few other things that I personally like to look for because they give a telltale. And one of them I always told you about is the 10-year treasury yield. If it goes up, markets usually go down. And it's been going up last week by 1.65%, now around 303. I think this week it might be slow, can even fall a little bit, but in general, this one will just go up along with the interest rates. And I have to conclude a little bit, try to give a little bit more insight about inflation and interest rates, because these things will affect the longer market. So if I may miss on this week, I think that I will be more correct also in the long market. When it comes to inflation, last week there were some numbers showing that inflation is slowing down. Everyone is celebrating, but don't be fooled about this. If you paid very much attention, you know that the oil price was 120. It fell down to under even 90. It was 86 just a few weeks ago. And that is the main reason for the lower inflation rates. We also know that the stores accumulated huge products in their warehouses, which they are now putting out for sale, trying to sell for whatever they can, which again also reduces the inflation. So you had the fall in energy, you had the fall in clothing industry, etc. And these things bring or brought the inflation to a little lower levels. Everyone is celebrating. I don't see any reason to celebrate because this is very temporary. I spent maybe 10-15 minutes trying to tell you that energy prices will go up, that we are now in a situation where things are escalating again to the worst. And if you look at oil price, I told you last week, I think oil will just continue up. We will be back around 100. I think we will go all the way to 200. Last week it was up $4 or 4%. And currently it's trading around $94. I don't see why oil should go down, and especially not as we're heading towards the winter. So here is my guess. Because energy again is going up, there is a shortage of energy, there is setting record prices for gas, there is setting record prices for electricity. We know that these things is a huge part of everyone's daily bill. Energy numbers, consumer price index numbers, and the inflation, they will just keep going up. In best case, you might have some bragging by the end of August, especially in the United States, getting close to election. You will have a lot of bragging about nonsense. But as every week head forward, it will be more and more clear that we are in a serious situation. The inflation will not go down as intended. It will be brought back up again to high levels, even record-setting levels. There will be a lot of stimuli issues. We already see it in a lot of countries. They try to give electricity bill supports. Norway do it, and I read more or less every other country is doing it, trying to get ahead of the revolt, because we know that Great Britain is struggling hugely with people not being able to pay their electricity bill. And there will be savings. So I think that we will still see peaking in inflation before that part is over. And the only way the banks can, central banks can fight inflation, a nation can fight inflation, is interest rates. That is what Powell said on Friday. Exactly what I'm repeating now. They have to fight inflation. Interest rates is the way to go. We have to take down your consumption. We have to put you down in the mud. We have to hurt you over your bills so you spend less. And that's the only way to fight inflation before it really becomes a problem. It's already a huge problem, but it can get so much worse. That means, of course, that some will not be able to pay their bills. We see this in Norway. For a lot of private businesses have stopped productions. Mentioned this already last week. I read more about this week that bakeries have to consider twice even firing up their ovens because the electricity is so hard. There is less bakery, mean higher prices on the bakery, etc. Inflation up, production down, never good. That means they will have to start lay off people to save money. So I cannot see even that scenario. That stagflation, which I've been talking about for a year now, that is coming, it's here. And it will be clearer every single day. Much negative here, but as a trader, you have to see this as an opportunity because you can put your money in interest rates, and there is a lot of instruments for this money to be made. It's just how you put them, where you put them. And as I gave a sneak peek, Chevron is doing very well, going up in the falling market. Energy, as I told you, might be good. So there is plenty of things. We just have to be somewhat realistic. I think these things will plague the fall, and in general it will put a toll on the market. So still there is this heavy negative thing on the market. But we quickly have to rewind back even a few more weeks. And I told you I expect some red weeks. What I want to see is the market to turn in the middle of the trend, because that gives a room to break up and finally go from that very long negative trend which we've been in for months and months and get into something positive. So we are still there, and we know that the market turns long, the stock markets turn long before the actual markets. So you hear me being negative doesn't mean that everything has to go very bad, but it is a little bit about how you plan your trades. And very, very shortly, because you're probably getting tired, even I'm getting tired of trying to explain this, we will look at the chart, come to that conclusion, come to that week ahead of us. I will try that final thing, summarize a little bit about what I said about strategies and how you play this. So how I personally play this? Well, when I thought markets were getting way too high some year ago, I started to reduce it. It started like this, that when we had the beginning of COVID, markets fell way too much. I just invested everything I had because, as I told you, it is way too much. It doesn't grab the logic, and things will get back. So I was very lucky. Before markets found the final top, Nasdaq found 16,000 points, I started to reduce. And you heard me that I think things are getting too high. I slowly reduce my exposure. I reduce and I reduce and I reduce. And I kept doing that because as market got more negative, and finally it turned out there was a top at 16,000, markets fell all the way to 10,000. I was out of most stocks, and I can even lose everything I have now and still be in a total profit because of the previous trades. Now I slowly are increasing a little bit here and there. I think that the markets will continue down. I think there is much more mayhem. In my opinion, there is much more mayhem ahead of us. But I'm no wizard. I told you I'm not an expert. I'm good, yes, I admit to that. But I'm truly not that wizard. I'm not that expert that can give you the exact moment things turn. Frankly, nobody can. So we don't even try to it. We don't even attempt to it. We try to be somewhat close. Sometimes that is more than good enough. So as markets now fall, I slowly increase a little bit. I put a little bit more into electric vehicles because I think electric vehicles will be the future, and they are cheaper now than ever before. So this is a little bit about strategy. And bit by bit, as markets fall, I increase. If you're lucky, markets will turn now and go for a upwards trend. But now it's time to look at the chart, come to conclusion before we go to this week trading tips. And if you're listening to this at Anchor, Spotify, or wherever you are, as I told you, this is also on YouTube, and you will see charts, you will see some numbers, make it a little bit easier to follow me and the logic that I try to prevail. Today, I will start with the long-term trend. We will have a quick look at the long-term trend because I mentioned this. And as you can see, if you're watching, and I will try to explain for those of you who are listening, there is a few things that I really focus on. First off, it's a very clear falling trend. We hit the roof, and as I told you 2 weeks ago, usually that means that you should sell because we're heading for a downturn. Relative strength index was way too high. It was overbought. Another sign that things would go down. So these last 2 weeks was not a surprise at all. But here comes the good thing. In this chart, you see two things. First off, you see that the relative strength index is the chart just below the main chart is getting very low. It is 40 right now. It's not oversold, meaning that it still can go down, but it's getting very low. It got from high to low. We haven't fallen to the middle of the trend yet, and we are not at the bottom of the trend. And this is a very good scenario, simply because to break a trend, most case, we cannot go down all the way to the bottom, then up, because you use all the momentum on the upturn. And it's too little at the end of the upturn to break through the falling trend. So we want to turn in the middle of the trend. That's usually where you have a trend shift. You see the stocks go to the top, fall to the middle, and then on that upturn has enough momentum to break the falling trend. So first big step for a longer term green market is to break this very negative falling trend. I like the following fact: the relative strength index is low, meaning that there is a high chance that we will turn somewhere in the middle of the trend. I like the fact that we are this high up in that falling trend, because that gives less chance that we will fall to the middle of the trend before we are on a new upturn. It's just exactly where it is. The middle of this falling trend is around 11,500, which means that we might have yet another week of pain. Relative strength index is also not oversold, meaning that there is room for further downturn. Volume is following the market. I like that. It's a good sign. But from the long-term chart, we can see that there is fair chance for continuous downturn. The other very good thing which I have to mention is that if looking at the chart, we can see some stars. We see a red star back in, it's actually a cross, but back in January this year, it was a major sell signal. Now, if we look a little bit forward, by the end of the chart, we can see a green cross. And this is a huge buy signals from the relation between the short and the long-term moving average, also called a golden cross. It's not golden star, which I invented back in 2006, a very strong signal. We'll get back to the golden star because we will move to the 3 months short-term chart. And if we look at the 3 months short-term chart, we see the opposite thing. We see that we are in an upturn trends. We are moving down from the top of the trend, which we like to do. We see somewhat the same. Relative strength index is 40. It's getting close to low. We're getting to the bottom of the trend where it's a natural place to turn. We can see that golden star, which I mentioned. We can also see that green golden cross. Two heavy buy signals, all issued in July 13, and especially the golden star tells you, in most cases, you have a huge upturn. So when we look at these two charts, I see the following scenario. There is, in my opinion, 70-30% chance that we will have further fall this week. But maybe even by the end of the week, we will start to turn up. I think that we will hit the bottom of the short-term rising trend, may even break it a little bit, that we might turn around 11,500 before we start on a new upturn. This can happen very swift and fast. It can be the beginning of the week, things turn, fall very hard, and then turn by Wednesday, go up by the end of the week, have that Friday, which I mentioned to you with new numbers coming in for job numbers, could be that fantastic Friday. Market may very well end in green. It's so hard to say, will the week be red? Will it be green? I'm pretty sure that we should further down. Will it bounce up by the end of the week? I just have to give you a qualified guess. And I have the feeling that I might be wrong. So the end conclusion for the week ahead of us is that it will be volatile. It will be a lot up and down. Gives you good trading opportunities if you're able to go in and down. There is a fair chance that the market is higher by the end of the week. If we get a huge fall in the first part of the week, it can actually end higher, so we get into a green week. Overall, my very best guess is that we have to have a red week this week. It will not be red by very much. And that it might actually be the last week before we head into some more green weeks. And that is that nice thing. You heard me be very negative about the fundamental things. But stock market, as I said, works a little bit differently. It's a different trends. So I think that is a fair chance that we will have a slight red week this week, go into some green weeks again before reality is back and we have to go down. We just have to hope that we build up enough momentum to keep above 10,000, because if Nasdaq falls below 10,000, it can be extremely catastrophic. We can easily fall very hard and we can get into a very desperate situation. Not very likely as is, but there is many things showing that it will be hard times ahead. We will try to stay optimistic. That might be the longest I ever spent on market analysis. I hope you are not tired to death. I hope that you gained some insights from it. It's trying to explain how things work, because nothing would be better than if you start to look at these things and become super good. Share your ideas with others. Use some reasoning why you think the way you think, not only for yourself, but also for others when you are commenting in comment system. At StockInvest.us, you can comment under every stock, and even sometimes I like to comment, so it's a good thing. You can discuss the singular stocks, but always try to have a good reasoning, because it helps you. It teaches you if I'm wrong this week, next week when I tell you the result, I know what I said this week, and I can easily identify where I did wrong. Same thing about stock trading, strategy, stock picking, all of it. We are heading for the final part, the trading tips, the stocks that I will try to trade this week. I thank you for following so far, and just stay tuned for the very last few minutes where you will have the trading tips. We are in the final part of this stock podcast where the market section became a little long. This is the part that everyone loves, everyone likes. It's the trading tips, where you hope to find some gems and increase your gains. But what when I'm wrong? Because sometimes I'm wrong. And one of the things I made wrong last week was rebuying in Agility. If you remember, we bought Agility back in week 33, AGT. It was bought at 16.72, had a good rise, went very far up to some 18-ish dollars. Then fell back, was cut by stop loss, giving a profit of 407. I thought I could repeat that and bought Agility also last week, but this one went bust because it just continued on, started on Monday, things starting to look good. Bought it at 17.17, starting to look good. I think it was close to 18, and I thought, okay, I was spot on. But then that hardship of the week came, and it was finally breaking the stop loss, giving me a loss of 507%. Was sold at 16.30. So I didn't sell it, the stop loss did. I had to take that loss. What about the others? We were already sitting in Chevron, and I thought, as I said to you, I thought Chevron would do good. We bought Chevron in week 30 at $139.30, with all the reasoning about energy and blah, 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 blah. And last week, Chevron continued more up. Bought on 139. Last week, ending at 163.41, it's up 17.31. And that made for more than 5% last week. So, Agility and Chevron together made 4-0 as Agility went down 5%, Chevron went up 5%. And in fact, I didn't lose on all. Only difference is that Chevron still stays in the portfolio. It's open, it's running on trailing stop loss, and it will just run for as long as it goes up when it turns, because no matter what happens, I will make money on this stock. It will be cut by stop loss. And here comes that thing. Increase your gains, reduce your losses. So I use trailing stop loss, I let them just run because I don't know where top is. You may say, why don't you sell Chevron at 163? Take that 17 profit and be happy. Well, who says Chevron cannot be $200 in a few months? I don't know. Do you know? So I just let it run by itself. Sometimes you will be hurt. You remember I bought some Medica at 22 cents. Went all the way up to 40 cents. I told you it may fall. I could have 60% gain instead, because I had a fixed stop loss at 30 cents due to the high volatility. I took only a profit of 34%, but 34% is indeed strong. So let your runners run. Trailing stop loss is perfect, and it works also the other way. To reduce your losses, trailing stop loss helps. So Chevron up, a guilty down, a guilty sold. But we also had Mercury. And Mercury went up. You remember last week I was 4% in profit for Mercury. Sadly, it started to fall, fell all the week through. Eventually, it hit that 5% stop loss. And just quickly, if you are new, trailing stop loss works this way because you have several types of stop loss. I use something called trailing. It follows the price up, never down. So as Mercury went up during the week, the stop loss went up. When the stock started to fall, the stop loss did not go up. It always kept that highest price. And after reaching the highest price, it fell actually 5%. It was sold at 32.23, giving me a loss of 0.06%. It just means that the stock went up 5%. Sadly, it also went 5% down by the end. Mercury is out of portfolio, was sold with a loss of 0.06%. Really, absolutely nothing. It could have gone the other way, but as you know, market had a huge tank, especially Friday, and that caused things to be sold. Then we have Lockheed Martin. Lockheed Martin was bought at 434, but did very good back in week 33, went up, and also had to take a little fall last week. But as I told you, I thought more stocks would do good if markets went down. Lockheed Martin fell like most shares, but not as much as the other shares. Ending the week at $431 was not enough to be cut by stop loss. It is in the portfolio bought in week 33, but so far only down 0.66%. So since I bought it week 33, it is down. But remember, I told you in the beginning of this podcast, Nasdaq is down more than 7% over the last 2 weeks. This stock only down 0.66%. Here comes that thought process. Here comes this long introduction into market section. Why do we think? Why do we plan? Why do we try to be strategic? Saved me a much huge loss, and who knows? Maybe this will be the week that things go back on track and Lockheed Martin will continue to yield, but still stays in the portfolio. Then there were Zomedica. As you remember, Zomedica was sold by stop loss last week, and I said that I really like, if I'm able to get Zomedica back at the 26 cents, I will rebuy. I did that. I was not able to get the 26 cents. I got it to 26.50, and started very good. I think it was maybe Monday, Tuesday. It went up to 28, even 29 cents, and I was back in super nice profit. But fell at the end of the week. This is a penny shit stock. You have to be careful. I like different things about Zomedica. As I told, I've been trading this with success many times. Ending the week at 26.60, up 0.38%. So when we summarize these things, we see the following. Mercury went out of the portfolio. A guilty went out of the portfolio. I still have open trades. Chevron, Lockheed Martin, Zomedica. A new wonder is, could I buy any of them now with profit? Well, I think that Chevron still is very good case, but the risk reward is not so attractive as I bought it. Would I buy it now? Well, I would say it's a nice stock to have, but it's not that obvious trading tips for the week. It stays in my portfolio. Lockheed Martin is a better option when it comes to trading tips. Zomedica at 26.60 is a no-brainer. I think that's a very good trading opportunity. If it starts a little red this morning, you can have a super opportunity in my term, and you can decide for yourself. You just go for it 5-10%, because I'm pretty sure that it will bounce up. I personally think that we will see this back to $1. It's just a question when it will be. One of these, as soon as market starts to get green, that may go very far indeed. We will see if I'm wrong or correct. Anyway, these are trades. I can recommend Zomedica as a trading for the week, and Chevron and Lockheed Martin stays in my portfolio. I have to do own due diligence to see if they are obvious trading tips at current level, maybe Lockheed Martin more than Chevron as is. But I have two new trading tips, which I will try to get as cheap as I can when markets open a little later today. These two stocks have that common pattern. They've been falling very hard. I will open the charts for those watching the YouTube version, and you can see the first one is called Rogers Corporation. And the Roger, they design, develop, manufacture, make engine materials and components worldwide, especially through electronic materials, selling to EVs and all these things. What happened? It fell extremely hard. It could be quarter results. I haven't checked because I trade something called technically. I trade on the charts. What we see here is a stock that fell from 270 all the way to 252. What I really like here and what I want you to pay attention to is that extreme increasing volume on the last part of the fall. That's a classic sell-off. Normally, you will have an upturn either 1/3 of that previous fall or 2/3, meaning that if it fell, let's say, to make it easy, $18, it either go up $6 from 252 to 258 or $12, which should then be around 264. You can even see something called a double bottom formation, indicating that the stock should go up to 263. It's a technical indicator. It's a very nice one indeed. Relative strength index 26. I think the risk reward is so attractive that there might be an upturn. It might be that 259 will be the high. I don't know. If it takes out the full potential, there can be anything from 5 to 7%, which are really low. If not, there might still be a few percent. The stop loss, I will decide the stop loss a little later today when I see what kind of opening price I get. I may not stick to the standard 5. It could be 3% for this one. I will have to check, as I said, a little bit later exactly where I put it. I think there is money to be made. And I think that it's a fair chance that it will go up to 259, even 263 should be possible. All depends on the week. So ROG is one of the trading tips for the week, ROG. But it will not be that 20-40% gainer. Here we are just trying to hunt some nice percentages while we are uncertain which way market will go. So I'd rather be safe. I'm playing a little safe here, betting on that classic bounce up, and we will see by the end of the week. And we have one more. It's Alphatec. And Alphatec Holdings is also in the technology, but they are more for the health sector. It's spinal cord things, etc. You can read more about the company if you want. Again, I'm not looking at the company as such. This time I'm also trying to do the same. I'm trying to do fishing where the stock is at the bottom of the trend, in the expectation that it can go up. If I'm correct, it should turn. It should have a rough start in the morning today on the Monday, and then start pick up. Can I pick it up at 750? I think that might be a very good opportunity, and I really like that low resistance above. This one has a very huge wide range up with little resistance above, meaning that if it gets the right condition, it can move very fast and it can gain many percentages. But on Friday, it lost almost 5%, so this is much more high risk than the previous stock I just mentioned, ROG. And we will play it accordingly. I will have a wide enough stop loss. I will try to get a very nice low position and hope that we will see the following scenario, that it will push up, it will start slow, it will look like it might be a fail bet. But when breaking 830 on a good green day, it can go straight to 9. And we can be in for a nice surprise. You will see the chart if you just go to the YouTube channel and check out the podcast. That distinct index is 48, is moving up from a bottom, but the bottom was also formed by the pivot at the bottom of the uprising trend. So we have two candidates, bottom of the trend. One is a classic bounce up, and this one is just a classic bottom of the trend pick. There is, for those who know technical analysis, there is a possible head and shoulder formation that will give a neckline around 7.5, and I promise you this is not a good thing, because if it breaks that 7.5 it can fall very, very hard. So comes with a certain risk. If this is a negative head and shoulder formation, we will see. It's there, we keep an eye on it, and we make the assumption that get in low, hopefully the low today, put a trailing stop loss on it and see if it turns out the right way or if it flips. Risk reward for this week's trading tips is somewhat medium. I will be in 5 stocks simply because some are not sold. Chevron, Lockheed Martin, Zomedica, and now I will also add ROG and Alphatec. I will be 5. Many times I've only been in 3. You heard me this when markets were bad. I was only in 2, 3 of them simply to keep some trades open. I really hope you will have a green week. And now we spent the better part of not 30-40 minutes, but almost 50 minutes together. My name is Jim. I'm one of the co-founders of StockInvest.us. We have one goal, one aim: help you reduce your losses, increase your gain. A lot of new things coming on to our webpage. We are heading more towards real-time signals because we like also to give you a better edge in the trading. But no matter what I say, no matter what our webpage say, it all comes down to you. And I will leave you on a final note. When things are really bad, your portfolio is really red, and you get to the point where you are starting to give up because everything seems impossible. Close your eyes, breathe. Open your eyes, open an Excel sheet or a sheet. Start with strategic planning and be patient. Do not double up trying to recoup your previous losses. Start from the scratch. We start from the scratch. I started this trading podcast because I know how many of you are out there doing the same. I started with these trading tips, and if you have followed them, you would have so much green, because they have been overall more correct than wrong. I am mostly right on my trading tips, but there are losses, but they have been cut short, leaving a hefty profit. And 2% is 2%. If we can do 2% this week, 2% next week, we are gaining. We are not aiming to go all in, do a 200, 300% on some luck. We build brick by brick. So if you are there, you are at the end of your journey. You are tired of stocks, you are tired of crypto, you are tired of bad advices, you are tired of most. Find some patience, read some books, watch some YouTube videos, but mostly focus on yourself. And as I said, breathe. Put out a strategy, make out a strategy, think long term, not only short term. What are the big trends? Because that will help you get into stocks, and it will not only be pure luck everything. If you believe green technology is here to stay, why don't you slowly invest now? You might not recoup this week, next month, but who knows, after 6 or 12 months at the same time. Make sure that you are not into high-risk stocks. I have a few days in Norway. It was raining when I came here. Finally, sun is shining. It's supposed to shine for the last few days as I'm here, and I'm planning to enjoy that. I hope you do that as well. As we're heading into fall, we're heading into shorter days and for sure colder days. Enjoy that last part of the summer. I will be back in just a week, hopefully fixed and everything. I'm back to normal. I apologize if the recording is not the best. Audio-wise, it is what it is. Now I will put on the coffee, prepare for opening as this podcast is being produced, and later also then put on Spotify, YouTube, etc. So you can hopefully enjoy it. And trading is opening soon. Next week you will know, was I right about the Rogue and Alphatec?